the spread too thin. I don't want to over
Mm-hmm.
diversify. Some of the
Mm-hmm.
times I don't even want to diversify any at all. So
Yes, that's my problem right now. Yeah.
I mean, I I have to be very, very, very careful. I'm not careful in a bad way where I'm like, all right, um, I don't want to choose this and it go wrong. It's careful as in I don't want to miss too much.
Mm-hmm.
But then at the same time, if you hit big enough, the misses don't matter.
Facts.
Mm-hmm.
Yeah.
Mm-hmm. Because the thing is, imagine you like right now we're looking at Jamty. The day recording it's like $2.50, and the thing is, you can actually get decent volumes in the queue. I see. Let's see. You could buy $1 million, and your average price is like 270. So your average price comfortably it's below $3. Let's just say, in my view, that if they do something similar to like what they do with QWI, they give you a record date, they give you an IPO discount, and they give you a very short time for the record date. I think for QWI, they gave you 3 days to qualify. I think that would send the price from this $3 to probably about $4 or $5. But my issue is that imagine me buying now, and then when it reaches summer, so let's say June, July, they end up pushing it back. Suppose they even push it back to like September versus all the other stuff going on now. That it's like you have to go, you have to balance that. And yeah, you could put some money in now, but then the worst part is imagine you put some money in and you say, go continue add, I'm going to continue to add more, and then it happens earlier than you expect and it just flies. But then the amount of money you put in, that's not really going to do that much for your portfolio. So there's always that balancing act.
Mm-hmm.
Um, yeah,
Yeah, I get
always that
that too.
balancing act.
Because as Kirk says, well, Kirk says he at the starting of the year he would mess those kind of stuff. For me, what I
Mm-hmm.
do is whenever I'm looking for a play like that, like Jam T, I always have it in the back of my mind. So any article that comes out about Jam T, any
Mm-hmm.
anything, any spike in the share price, or you see a lot of shares traded, stuff like that will get
Mm-hmm.
my attention, and then I start reevaluating. What does this mean?
Mm-hmm.
Right? Is this the thing that's happening now, or is it not? But you're always keeping an eye on it because this thing could possibly fly. So that's the strategy I take. Because especially when it's things that you can't necessarily time, you don't know.
Mm-hmm.
Like we don't know when the whatever they planted, if it's a dividend in specie, we don't know the record date, right? If it's they're not going to drop, we don't know when the prospectus going to drop. We're not sure.
Mm-hmm.
So in
Mm-hmm.
those instances, you just have to keep your eyes like a hawk on the market. That's how I see it.
Mm-hmm. Yeah, every time I see a Jamty article, like I remember reading up to the most recent one where they gave that new timeline. I checked back that article and I was even calculating it. I think he said, was it my food? I think he said in the article maybe 6 months. And then I was like calculating, okay, what was the date of the article? What would be the 6 months and stuff like that? I'm like,
Yeah,
yo,
that's why I like if reporters got the timelines and stuff like that right and actually quoted them
yeah.
right, because
'Cause-
that does a lot for us as shareholders, because we this is the information that's public to us, so it's what we
Mhm,
see. We don't have no insider info. This is what we're using, so
mhm.
we need to know.
I even see John Jackson. He came out with an article. You saw his top, what was it, the 13 junior market stocks to watch for 2023. And Jamty is on that list, but then he didn't say anything about Caribbean Dreams Foods. He just mentioned like QWI and saying that basically, oh, they're likely to make big gains from QWI and the real estate development. Nothing about the manufacturing. Well, nothing about Caribbean Dream Foods, I should say.
Hmm.
Yeah, but what I do sometimes for the timing thing though is especially like when the CEOs or the execs come out and speak about, oh, we're expecting this in the next 6 months. I have a long um set of notes, so I go through from time to time. So I write down, all right, jam tea 6 months. So when it boils down to the 6 months, or say for example, not given like a more pointed date. For
Mm-hmm.
example, like the Palace stock split. So
Mm-hmm.
have the dates down, knowing that it's I think end of business day February 28th. to look out for something in and around that date. So I mean that's my method to um work with the dates thing to know, all right, I said 6 months, so let me check back a couple of months after.
Nah,
So
you're
you
you're
always
very
put a
right.
grain of salt. You always put a grain of salt because yeah, they might say something, but
Yeah, look what they've said in the past, right? So
and there's several different levels to it because there's the reporters, and then there's also the CEO. So the CEO could have said something, but if I wasn't at the meeting, sometimes I've seen them misinterpret stuff.
Yeah, and to be fair, I mean this is a joke that we have in the group. So when John Jackson said summer, we always say, well, he never said summer 2022 or summer 2021. He
yeah,
just
that's
says summer. And summer come every year. So you can probably just pick a year that have a summer and just do it.
Yeah.
yeah, that's true. Okay, so anything else on the market you like, Kirk,
Um,
or any stock you're
without
buying that you
without
want to?
without without going right now into specific companies, what I'm realizing now
Mm-hmm.
is that a lot of movements or anticipated movements is with corporate action. So I mentioned Palace a while ago with the stock split, and
Mm-hmm.
then there's the rights issue for
Fast search.
Fosterich that's overdue.
Mm-hmm.
Then there's the I create rights issue that's way overdue. and
This-
then and then there is the notice that came out from 138 Student Living about additional equity.
Yeah,
So
cough, cough for the
uh,
APO, but yeah.
so I mean, what I'm realizing right now is corporate action has been moving the market quicker than, let's say, good results.
Mm-hmm.
Bad results move the market really quick too, but I mean, upwards. I'm more so looking at those corporate actions. I mean, outside of that, I mean, I'm looking at a company like Dollar Financial. I think Dollar is really solid. Has a lot of potential, and even the unjust price action alone, I
Yeah.
mean, I'm expecting Dollar to, at the very least, I mean, retrace somewhere above $3. I mean, they're really solid in my view.
Wait, you just said
or
somewhere
in our
above
view,
$3?
Yeah, I was saying that I expect at least some amount of retrace to above
Mm,
$3.
okay.
Um,
You don't have like a goal for the end of the year, because last our last episode we talked about our predictions for certain stocks. Dollar was one of them, right? But we'd love to hear. Obviously, this is not financial advice. Just putting that out there. Everybody should just do their own research, but it's just our opinion, right? Give us a price, bro. At the end of the year, where you think dollar going to reach?
at the end of the year, the caveat is they manage that interest cost from the bond that I think they would have just closed.
Yeah.
not too
Um,
long ago, yeah.
not too long ago. Given that they managed that interest cost, I $4.20. So that's what I think they're like 2.95 at the close. Um,
On Friday. So yeah.
Friday.
I see 302, I see.
Oh, oh, whoa! All right, that move quick, man. So, yeah, I expect
Yeah.
about somewhere about $4.20.
Yeah,
Okay.
so that'd be like 30, almost 40%,
Yeah,
36%.
man.
And then the beautiful part about it, Kirk, that we mentioned on the last episode is that this is on heavy volumes.
Yeah, man. Dollar has some attractive volumes moving. That
Mm-hmm.
man, I love it.
Yeah,
I love the
like,
volume. I love the volume.
yeah. I mean, like, even look at the recent announcement they made about Fastwitch. Um, well, not even
Which
just
day
the
was that?
announcement. the announcement was made January 26th, but something that I heard at the JSE conference, like I heard a clip from the JSE conference where Cecil Foster was speaking about it. He said that they have over $2 billion. Fosterich has over $2 billion worth of invoices for, I think, those type of products. So what that's saying to me is that, yo, there's a ton of demand for their products, but the issue is just the financing for it.
Mm.
So Dollar is that middleman there. So they can help them, even if it's half the customer. I mean, I guess they'll do their due diligence, do their risk assessments or whatever. Even if it's 50%, 30% of that business, that's a huge business, yo. I expect that they might even have to come for more, do another bond maybe this year or within the next year.
That's that's a lot of prospective demand. So I mean, I'm happy and I'm comfortable in my prediction of where dollar might actually end up at the end of the year.
Yeah, I'm actually very curious to see these new set of results, which should be coming out next week. I think some.
Yeah, because that was over the Christmas period, was it?
So
Yeah.
October, November, December, that's usually their best period.
Hmm.
so it should come out.
Well, it's their
Everybody,
Q4.
are they
Mhm.
releasing Q4 numbers, or will they do audit? Did they state?
I don't
No,
Can
think
I
they
recall?
did.
I don't think
I
that's
don't think they
stated.
did. Yeah. And the thing is, Meds Dollar always, Dollar says there, I think it might actually be it could be the audited, because remember, I think it was Kadeen, I don't
Oh
remember
yes,
on which
yes.
forum,
It's more than likely the audited.
he had said something about the timing, like they're always going to try to drop their results. I should probably pull up the exact word. But I
Yeah,
think
early it was.
if it was the unaudited that they were gonna drop, I think they would have dropped it by now based on the timing, but I need to double check that.
Okay,
I need to
cool.
double check that.
I'm looking forward to some information from them. I mean, over the Christmas period, I got a very nice dividend from them. So they're doing things, man.
Yeah, same,
That
same, same.
Dollar
Yeah.
doing things.
Yeah, dollar is
Yeah.
definitely one of our favorite stocks. We talk about it a lot on the podcast because there's just
Hmm.
always so much news, so much market talk, market hype about them, and
Hmm.
they're freshly listed and so on. So you
Hmm.
know,
And they take the shareholders seriously. They did like the earnings call, and I think they said they plan to keep doing the earnings calls. They did it with Learn, Grow, Invest.
mm,
Yeah.
yeah, big up, learn, grow,
Yeah,
invest.
I like that companies locally now are actually showing that you know that they care about their shareholders, so they're managing that relationship. Even more so, I love when CEO or execs of the company care about the share price of the company. For me, seeing
Hmm.
that is a green flag for the company. I mean, if
Hmm.
it's in their interest that the the stock price,
Hmm.
if it's in their
I
interest,
appreciate.
then I'd be more comfortable investing in that
Hmm.
company.
Agreed,
Yeah.
and not just
If
show
they're buy,
interest that they're buying. Yeah, that
if
they're
they're buying and
buying,
believing,
and their
that's good for my
shareholders.
pocket too.
Yeah, if they own a decent bit of the company too, it's also in their best interest for the company's share price to appreciate and so on. So I agree. I agree. I love to see that.
Hmm.
Yeah.
Hmm.
So all right, you said corporate actions. So any corporate actions you're really looking forward to outside of the companies we've mentioned, Jamty and Dollar?
Yeah, so what I'm looking forward to a few equity raises this year. I mean, not sure if it's because of with the last equity raise, which was Image Plus Consultants. I'm not sure if it was because of other things going on in the finance space, but I realized the participation was not so heavy, and post trading gave a significant opportunity to
Mm-hmm.
amass volumes in a company that would have come to market at a significant discount already. So I'm thinking that there will be more equity raises of a similar vein, that don't necessarily get that first day halt, second day halt, third day halt going all the way up to 250 or upwards percent. So I believe that that's gonna be a theme this year, where the stocks that come to market won't necessarily have that. Um, I don't want to say over exuberant, but that
IPO pop.
huge IPO pop of like hundreds of percent. So hundreds of percent. So I mean that provides an opportunity, because I mean, if you look at something as simple as the tax benefit play, I mean, also what an IPO normally brings with it, in my opinion, is that, you know, the business gets more publicity, and
Mm-hmm.
some other times it's after an IPO that's when I start seeing the businesses around, because I don't know if it's because I'm subconsciously checking for it,
Mm-hmm.
but after an IPO I just start seeing the businesses around more and more and more. So that's something I'm definitely looking forward to this year. I mean, hoping for better allocations. I mean,
When
I
by
mean,
better.
the dollar,
we got good
the
allocations before for Image Plus.
yeah, man, the Image Plus allocation was nice, man, but I love it. Um, but then the thing is, you don't want too good of an allocation.
Yeah.
If you get too good of an allocation, you kind of gonna say, yo, John, ah,
Oh boy,
Yeah,
who I
I
go buy
remember
this from me? You know.
Theon and I applied, and I remembered when the allocation came out. Was it? Did you like message me, Theon, and you're like, "Bro, what are we gonna do? Oh my gosh, like crap!" And I was like, "Well, we'll just go have to watch it day one still." And I remember watching it, seeing the queue, and I was like, "I can get out." And we got out at I think 9% profit day
It's
one.
220,
Yeah, something like
two
that. I
dollar
think it was like
20.
9% profit after taxes and whatever.
Mm-hmm.
So
And then
yeah, but
yeah, as you said, there was a huge buying opportunity the days
Mhm.
after, because as you say, it
yeah,
was enough
it went
trades.
as low as
It went as low
I
as
think it went as
270s,
low as
170.
170s.
170.
Yeah,
Sorry, 170.
177 on what's this? Day one, two, day three, 177.
Yeah, that.
And now it's back at about $2 and a cent.
Mm-hmm.
So
Yeah. So it's like it's not necessarily a huge percent that we're used to, but the thing is the amount of you could literally have moved $1 million in and out of it.
Yeah, look at day two trading. The close price was $2, and the volume was 7.8 million units were traded.
If someone was
So
brave enough to put $1 million in at 185, so it's not even the lowest low, it's not like they caught the lowest, but they caught okay a decent. They got it at 185. They could be selling it at 210. That's 11% or over 100 grand within 2 days a day.
yeah,
Like,
yeah.
yeah, I'm gonna do well with 100 grand right now.
Mm-hmm.
So there's gonna be a lot of opportunities on the market this year, and I mean, likewise, I mean, no, I don't want to say, there's all doom and gloom, but I mean, I expect quite a few companies to not have their hottest years on record, so to speak. I mean, we just recently saw NCB's release numbers. I think they're back to like 2018 levels of profitability.
Mm-hmm.
So I expect a similar theme about for a few companies.
Especially in the
Um,
financial space, it's
I mean, in the financial space now, given that a lot of Sorry if I get too technical and boring here, guys, but given that a lot of the securities dealers, how they fund their business is by short-term borrowing or repo rates, which would have significantly increased in the face of rising interest rates to combat the elevated inflation. I
Mm.
mean, net interest margins have compressed, so they're borrowing at higher rates, but asset prices have not reset quickly enough for them to continue making the same spread.
Hold on,
So
Kirk. You have to go through all of that because I know you
yeah,
lose
man,
you lose
definitely.
a whole heap of people a while ago.
Yeah, man, definitely. So I mean, all right. So the securities dealers normally tend to fund by borrowing
Hmm.
short term, you know, from the BOG or from other securities dealers like 30-day, borrowing money for 30 days or borrowing money for 60 days. So prior to the global spike in inflation, they could borrow monies at 1%, 2%, 3%, 4% short term. You can use that money buy an asset that's giving you 8, 9%. So the spread there or the net interest margin there, is a bit wide.
Hmm.
So now when interest rates have increased to combat inflation, liquidity is declining, then the cost of credit becomes elevated. So the borrowing rates are higher. So you're borrowing at now 8%, 8.5%. However, when you're deploying the money, you're not making the same spread because you're not making 12, 13%. You're making probably 9.5, borrowing at 8. So your net interest margin has compressed.
Yeah.
So it's that harder to make net interest income. So companies in the financial sector would have to now become, very creative and nimble
Yeah.
in times like this to be able to to beat performances that they would have made previously.
They need to hire some
But
professional analysts because
but
oh no, keep
but
going, keep going.
I'm confident, however, in the whole sector's resilience. So it's not a case where I'm worried about the sector.
Mm,
However, that's just something to be mindful of.
okay, okay, fair. I was talking about, so when I was saying analysts, remember I started the podcast by saying you managed NCB's equity. There's a fund. I want you to tell us about that
Mhm.
and how did you manage to, how much money did you manage and so on. What did you do? Just tell us about that whole experience.
So that experience, I was at NCB between 2021 and 2022.
Pandemic, heights of the
And
pandemic.
Market was
yeah,
down.
what I did, market was down, some stocks are up, but you know, in terms of my job description, I was charged with the management of a few collective investment schemes. So those were some unit trust portfolios and some other collective portfolios. I managed. I'm not gonna put a number of it, on it, but I managed
Over $1 million.
way in the way way in the tens of billions of dollars.
Wow.
Wow.
In terms of all the portfolios, so way in the tens of billions of dollars in terms of all the portfolios. So funny story. When I was talking to some of my industry peers, and I was like, "Yo, but the NCB, and me I can manage the unit trust portfolio, so me I finish number one. Man, them say, "Yo, what? Bet you." So, "Yo, you sure you want to bet me?" And them say, "Yeah, man. You have to prove it."
Mm-hmm.
I'm like, "All right, cool, no problem." So I manage the unit trust fund. I mean, I say, "Yo, set some high expectations, I can't come to them and say, yo, me the second or yeah, man, me a climb. I have to come to them and say, yo, I'm first." So I mean, it took a lot of a lot of hard work. I
Mm-hmm.
mean, I have to also big up the team that I was working with at the time. I have to thank them for believing in my ideas and my suggestions.
Mm-hmm.
And surely enough, um, they ended up managing the number one unit trust in the country at the time. I mean, double digit returns and a lot of money, as Preston say, more than $1 million worth of money. So
Double
that was
digit
a fun
returns.
experience.
Of course, man, because I
Yeah.
remember looking at the list of the unit trusts and so on. They were all down. All of them were like in the red, negatives. And
Mm.
you were the only
Remember the
one.
market was down. No, you can't make money when the market is down.
Oh yes, yes, yes. So I have to blame it on the market then, Brian. Yeah, that's true. That's true. But yeah,
That was a fun experience,
I
man.
can imagine.
So
Yeah, I'm trying to think of meds. Like how? Okay, what kind of you would? It wasn't just only equities, so you would have to like do a percentage allocation to say, oh, fixed income, stocks,
so
those kind of stuff.
so so it's the equity fund that's number one, and how most collective investment schemes are in the industry is that most of them are how would I say, fit for purpose. So in terms of ensuring, and I have on my industry cap here, so ensuring that each individual customer um, is receiving that financial product which is best for them. The collective investment schemes are usually stratified, so you have an equity fund for persons who want exposure to those type of assets. You normally have fixed income funds across the different brokers and securities dealers for those who want, exposure to some sort of fixed income. You usually also have like a money market fund for those who want exposure to more liquid short-term securities. So the equity fund was pure equities.
Mm. Wow. And JSE, Jamaican Equities.
Yeah, it was a local equity fund there.
Mm.
Wow. How old were you?
At the time is, you asked me that time, I say, how old am I now? But I'm not so old, man. At the time I was 24, and then I ended up turning 25.
Wow.
Mm. That's
That's
So
actually
yeah,
impressive.
manage tens of billions at 24, 25.
yeah.
That's
I'm like, how do you? Can you tell us, for example, some of the I don't know some of the stocks that you are looking at or invested in?
I can't say some of the stocks, but I
Yeah.
can say it's um so as we discussed earlier in terms of companies like Dollar, or you would have look at a company such as Image Plus where you can see the volume moving,
hmm
Mm-hmm.
then yeah, you would take exposure to where the volume is,
Mm-hmm.
where there's potential for the growth. So that's one of the key strategies. And what I want to say as well, I mean, a lot of persons have the misconception that, oh, because the main market has bigger companies, because the junior market minimum is only 500 million, that the junior market is not as liquid as the main market, or the junior market is liquid, when actually if you were to actually look at the full quantitative data, so if you should just do straight quantitative analysis on volumes, you would realize that for a large part of 2021 and 2022,
Mm-hmm.
the junior market moved heavy volumes, and it could, by some metrics, could have been classified as more liquid than the main market in 2021 and 2022.
hmm
Mm-hmm.
So it's things like that persons would have overlooked, that, oh no man, the junior market, they can only raise a max of 500 million. And, oh no man, a company like Dollar is just a little loan company, and
hmm
you have big banks here on the main market. You have a Scotia here on the main market versus a Dollar on the junior market. But if you look at the volume traded,
Mm-hmm.
the junior market stocks out sometimes, really did outpace the main market stocks. So I mean, is that different way of thinking, and not just running with the old guard or the old views. I
Yeah, you
mean,
don't shy away
uh,
from opportunity because there. I've
yeah,
heard some people say they don't like investing on the junior market or so on because of that same
They don't
illiquidity.
like profit.
Yeah, but that's the thing. You now deny yourself the opportunity to make profits. So, but why do that? So, I guess you take a different approach to it. Because if I can imagine, I don't know how the industry is, but I can imagine it's a lot of the funds would be buying into mainly main market companies and looking mostly at main market companies if they have a portfolio the size of tens of billions. So to look at junior market companies as opportunity, that's big. And I know maybe not a lot of, I don't know, I'm not sure if maybe not a lot of funds would do that, but that's just my understanding.
but I mean, you can check the top 10
Yeah, the top tens,
the top 10 reports that normally come out with the quarterly or audited statements, and sometimes you do
the
see
unit
where
trusts.
some of the
That's
funds,
true.
yeah, are positioned. And sometimes some unit trust companies in the space, they do actually produce like a fact sheet where they may from time to time say, hey, we have exposure to this stock or that stock.